For more on this, we're joined by Farah Mourad in Dubai. She's a senior market analyst at the IG Group. Welcome to the programme, Farah. Now, with the Fed facing its deepest internal division in over 3 decades, how does that complicate the path forward?
Highly. I mean, it's obvious that the inflation debate is not yet settled. Some members see inflation as the main story, and others are focused more on growth. I think both are very important at this point. Investors need to price a wider range of outcome. Is there going to be less rate cuts, or is the sign of a rate cut even the wrong signal that we got from this meeting? Maybe we need to see higher for longer. So I think that's what the markets needs to focus on. What does that mean for investors? Where they need to focus? I think commodities is supported some stocks, but obviously it might have some pressure on high risky assets.
And we're seeing Asian equities down around 1%. How vulnerable is the region to spiking oil prices than what we're seeing over on Wall Street?
Way more vulnerable. Most of Asian economies, they're energy importers. Even some of them above 80%. So that would not only affect the supply or the price of oil, it would also affect the margin of companies. It would affect the currency as well. So in case this lasts for longer, it will obviously, and the Asian economies will obviously be hit harder than other economies.
Now, with geopolitical tensions simmering, what's the likelihood of Wall Street extending losses if Iran tensions escalate further?
Highly as well, because we've noticed once we had a bit of a relief in the headlines, we saw whether it's NASDAQ or S&P 500 reaching back new all-time high in like a straight line almost. That was mainly because of euphoria back to AI trades and the earnings season beating expectations. Yesterday we had one of the bigs, or in the Magnificent Seven, they all beat expectations, yet they did not deliver numbers that allowed prices or the indices to move even higher, especially when it comes to indices or sectors related heavily to oil or industrial sectors. They might be seeing more pressure. So if there's no positive headlines or peace talks with positive signs coming in, I think we might see pressure coming back to the stock market.
So are these strong earnings not enough to offset the ongoing pressures of geopolitical tensions?
I mean, there was a V-shaped recovery, even more than a V-shaped recovery. We saw a new all-time high. But now markets and investors are pricing, because the main euphoria was coming from AI-related stocks and stocks heavily investing in AI. So now that's in focus. Today we have Apple. It might give us also a hint of how the markets are reacting to these big tech companies investing heavily on AI. Supply of oil will be the main story as well. So in case these two are not, there's no positive signs, earnings season euphoria might be behind us, and we might see pressure coming back, yes, to the stock market.
Farah Mourad in Dubai, thank you very much as always.